Okay, good morning, everyone. Looking at the US stock markets, the Dow has earlier recovered from the 24,000 psychological level. Since then, we are seeing a strong recovery towards the 26,300 points. Subsequently, the Dow has pulled back over the next four consecutive trading days, just towards the 25,000 psychological level, and it formed a bullish harami candle on yesterday above the 25,000. So for now, let's monitor to see if there's any follow-through by interest above yesterday's high of 25,300 points level. If there's a follow-through buying interest above that, then this could be the short-term breakout, pullback, and the continuation pattern for the Dow. Firstly, to retest the 26,000 and subsequently towards the 26,300 points level. In the meantime, the 25,000 will serve as the immediate support level on the Dow Jones Index. The recovery on the Dow Jones Index came in after US officials has announced that they are going to put the next wave of tariff on hold, while the stronger than expected retail sales data in October has also provided some positive sentiment towards the US stock markets. Similarly, on the S&P 500, we are seeing the S&P 500 has recovered from the 2600 psychological level. Since then, we did see the S&P 500 has rallied towards the recent peak of 28.15. It formed a double top formation around that, and subsequently, the S&P 500 has pulled back for the next 5 consecutive trading days. After hitting the recent low of around the 27,000 psychological level, we are also seeing a bullish harami candle was being formed on the S&P 500. So for now, we are taking this as a potential breakout, the pullback to just towards the 2700, and a potential continuation pattern for the S&P 500 to trend back towards the 2800 or even towards the 2815 level on the S&P 500. In the meantime, the 2700 will serve as the immediate support level for now. Okay, so on this on the crude prices. Crude prices has endured a very volatile trading period, falling from the recent peak of 77 towards the recent low of 54. After 12 consecutive days of selling pressure, we are seeing some of the bargain hunting activities on the crude prices again. So for now, we expect the bargain hunting activities to continue towards the 60 until we can see a breakout, pullback, and continuation pattern above the 60, something like this, a breakout, the pullback, and the continuation pattern on above the 60, then only you can confirm for the recovery on the crude prices. For now, any recovery will be just taken as a technical rebound play. The recovery over the past couple of days was mainly spurred by the bargain hunting activities after a sharp sell down, coupled with the news that OPEC might cut its production in 2019. Some other days on our local front, the FMKLCI has earlier recovered from the 1670 level. Since then, the key index has recovered just towards the EMA 20, which is around the 1730, and subsequently pull back below the 1700 psychological level again. But over the past couple of days, we are seeing some of the good technical rebound indicators as the FMKLCI has formed the hammer candle, and on the next day, which is yesterday, we are seeing a bullish candle was being formed on the FMKLCI. On indicators wise, we are seeing the MACD histogram has turned green following yesterday's bullish candle, whereas the RSI has risen above the 50 level as well. So for now, on the FMKLCI, let's monitor for the breakout above the 1700. Should there be a breakout above the 1700, then we might see the FMKLCI heading back towards the 1730 or even towards the 1740 level on the FMKLCI. In the meantime, the 1670 will serve as the immediate support level for now. Tracking the gains in the Wall Street overnight, coupled with the recovery in the crude oil prices and also the crude palm oil prices, we could expect some of the positive sentiment on the FMKLCI to continue at least for today. On the lower liners wise, we are also seeing some of the positivity after the recovery from the 12,215 points level. It recovered towards the EMA 20 and subsequently staged a healthy pullback. So for now, we are taking this as a potential breakout, pullback, and a potential continuation pattern for the FM small cap index. Firstly, to retest the previous peak of the 13,190 points. Should there be a breakout above that, then this is confirmation of the breakout pullback and the continuation pattern on the FBAM small cap index for it to trend back towards the 13,600 points level. Things appears to be quite positive on the FBAM small cap index right now. As you can see that the indicators has been showing some of the high formation, whereas the RSI has risen above the 50 level as well on yesterday. If you look at the weekly chart itself, this is a potential recovery pattern that we are seeing. The bullish Harimi candle, it traded on a sideways, forming the hammer, and this could be the next wave of our recovery on the FBAM small cap index over the next couple of weeks. On indicators wise, you can see that the MACD histogram has returned green over the past 3 trading weeks. So that should there be a breakout above the 13,190 points, we could expect the MACD indicator to issue a buy signal, whereas the RSI could be rising back above the oversold position on the weekly chart as well. Some of the stocks that we can watch out for, firstly, will be a GHF system. GHF system has seen some of the recovery towards the recent high of RM86 level. Subsequently, price has pulled back. During the pullback phase, we are seeing some of the lower volumes being traded, implying that the buyers during this rally phase are still in position. Once again, it rallied with some of the high volumes being traded. It pulled back without significant volumes and traded on a sideways manner. So for now, we are taking this as the short-term breakout, pullback, and the continuation pattern that we are seeing the breakout above the 1.65 cents. On yesterday, on the past 2 days, it managed to breach the 165, but it did not close above that. It closed at just the 165. But on yesterday, we are seeing another gap up formation accompanied by some of the improvement in volumes, confirming the breakout above the 165. That we are expecting price to trend towards the first target price at the 174 towards the 180. Your stop loss point will be located towards the 1.61 cents level. So the risk to reward ratio on this company is quite lucrative. As you can see that you're taking about 9 cents potential return compared to the 4 cents risk. On indicators wise, following the recent breakout above the 1.65 cents level, we are seeing the MACD indicator has really showed buy signal, whereas the RSI has been maintaining its position above the 50 level over the past couple of days. Uptrend in that orientation formation was also recently re-established. The MA 920, 6120 has been in line. On our SKP resources, price is still on a downtrend phase, but for now we are seeing some of the bottoming out formation on our SKP resources. After price has hit the recent low of 17 cents, we are seeing some of the climatic volumes being traded from that period. Subsequently, price has recovered towards the recent high of around the 1 ringgit and of 45 cents level. After touching the 1 ringgit and of 45 cents level, we are seeing a price has subsequently pull back and trade on a sideways manner. But recently, we are seeing some of the higher of low formation on the MACD indicator. So for now, we are seeing a potential breakout above the 1 ringgit and 29 cents. So let's monitor for the breakout above that. Should there be a breakout above the 129, we can trade SKP resources towards the 145 or even towards the 1 ringgit and 57 cents level. Your stop loss point will be located below the 122, and if you can take further risk, the final defense will be located towards the 1 ringgit and 17 cents level on SKP resources. Following yesterday's bullish candle as price closed above the EMA 20 level, we are seeing the MACD indicators really issued a buy signal, whereas the RSI has risen above the 50 level. On KGB, price is still in a very strong uptrend interpretation formation. After hitting the recent all-time high of 1.28 cents level, price subsequently staged a healthy pullback just towards the EMA 60, which is around the 1 ringgit psychological level. After touching that, we are seeing a good recovery pattern forming the breakout, pullback, and the continuation pattern for the KGB. For now, we are going to monitor for this short-term consolidation breakout above the 1 ringgit and 23 cents. Should price breach above the 123, we can trade KGB towards the immediate target price or the intraday target price at 128, followed by the short-term target price of 135 level. Your stop loss point will be located below the 1 ringgit and 16 cents on KGB. On Amulus, price is still in a downtrend formation, so for any recovery from now, we just taken as a technical rebound play. Amulus has recently pulled back towards the 26.5 cents level. After touching that, forming the double bottom formation, it has earlier retested the 26.5 cents in earlier April. Once again, we are seeing a recovery above the 26.5 cents level. After touching the 26.5 cents level, we are seeing price has been traded on a sideways manner with some of the higher volumes being traded. So for now, let's monitor for this consolidation breakout above the 31.5 cents level. Should price breach above the 31.5 cents, we can see a technical recovery on Amulus to trend towards the 34 cents or even towards the 38 cents level. Your stop loss point will be located towards the 28.5 cents level on Amulus. Last two company for today will be under the oil and gas company. We are seeing some of the recovery pattern on the crude oil prices. So there could be some of the bargain hunting activities on the oil and gas stocks as well. Firstly will be a Dayang. Dayang has a stage of recovery towards the intraday high of cents level, subsequently price pullback just towards the recent low of 50 cents. After this touching the 50 cents level, we are seeing some of the accumulation was taking place on a Dayang throughout this period of time, with some of the very high volumes being traded compared to the earlier part of the month. So for now on Dayang, what we need to do is we're going to monitor for this consolidation breakout above the 58.5 cents level. It did manage to retest the 58.5 cents level yesterday, but it did not breach above that. Let's monitor for the breakout above the 58.5 cents. Should price breach above the 58.5 cents, we can trade Dayang towards the first target price at the 64.5 cents towards the 68.5 cents level. Your stop loss point will be located below the 55 cents level on Dayang. Another oil and gas company that we can watch out for will be Dynamic. Dynamic has been forming the uptrend interorientation formation, hitting the recent high of around the 4 ringgit and 28 cents level. After touching the 4 ringgit and 28 cents, we are seeing a healthy pullback on Dynamic as price retraced back towards the EMA 120 and subsequently traded on a sideways manner. So for Dynamic right now, what we need to do is we're going to monitor for this trend line breakout. Should price breach above this trend line of the 3 ringgit and 90 cents level, we can trade Dynamic towards the 4 ringgit and 4 cents or even towards the 4 ringgit and 18 cents. Your stop loss point will be located towards the 3 ringgit and 39 cents level on Dynamic. Should price breach above the 3 ringgit and 90 cents, we could expect there might be an indicator to show a buy signal, whereas the RSI could be rising back above the 50 level as well. If you have any questions, you can put in the chat box and I'll reply you shortly. There's some question here on firstly will be Supermax. Supermax has earlier recovered from the recent low of around the 2 ringgit and 58 cents level. Subsequently, price staged breakout above the 3 ringgit and 15 cents level and continues to march higher. So for Supermax right now, let's monitor for the next breakout above the 3 ringgit and 73 cents level, given that price has been consolidating over the past 1 week trading period. So should that be a breakout above the 3 ringgit and 73 cents, we could see further recovery on Supermax towards the 4 ringgit psychological level or even towards the 436. Your stop loss point will be located towards the 3 ringgit and 48 cents level on Supermax. Most of the glove rate manufacturers has been a recovery or on some of the chalking some of the minor gains as of late. So Supermax could be recovering towards the 4 ringgit or even towards the 436 over the near term period. The ringgit has also weakened towards the near the 4 ringgit and 20 cents against the $1 level as well. So this could be one of the momentum play or the team play on the forex for export related companies. On hibiscus, price has again made a very strong rally towards the 1 ringgit and 36 cents level. After hitting the 1 ringgit and 36 cents, price subsequently pulled back just towards the EMA of 120 and traded on a sideways manner. So for hibiscus right now, after the gap down formation, we are seeing a bullish candle was being formed on hibiscus, implying that there's no follow-through selling pressure below the 98.5 cents. So this could be another recovery play that we're expecting price to recover towards the 119. Should price breach above the 1 ringgit and 19 cents level, then this could be the double bottom formation or the double shape formation breakout that we're expecting price to head back towards the 135. So the first target price right now will be located towards the 119, towards the 135. Your stop loss point will be located towards the 98.5 cents. If you are keen to trade on this counter, is now now is a time that the risk is quite low, as if you trade around the 1 ringgit and 6 cents, your risk is just about 7 cents compared to a potential gain of 12 cents. So the risk to accumulate on this counter right now is quite low. You can start to accumulate now for you to trade towards the 119. But if price were to violate below the 98.5 cents, then you have to cut loss immediately, or else it will be forming the lower high and also the lower low formation. On Genting Malaysia, price has again gap down, hitting the intraday low of 3 ringgit and 18 cents. I believe that this is the 3 ringgit and 18 cents level is the 30% threshold on a daily decline on Genting Malaysia. So after hitting the 3 ringgit and 18 cents level, price subsequently traded on a sideways manner. So for Genting Malaysia right now, we need to monitor for this breakout above the 3 ringgit and 77 cents. Should price breach above the 3 ringgit and 77 cents, then we can see a technical rebound on Genting Malaysia towards the 4 ringgit or even towards the 4 ringgit and 28 cents level. Your stop loss point will be located towards the 3 ringgit and 51 cents. So for now, I'm expecting price to just trade just on a sideways manner until we can see a either way breakout. Only we can confirm for the next direction on Genting Malaysia. If there's no further question for today, then we'll end the morning briefing. Thank you.